Asia greets the new year, but for markets it's not a festive time as the European debt crisis looms large. And for the world, there's another potential problem: China. The country kicks off 2012 with PMI. The manufacturing sector should have contracted for a second consecutive month as the weaker global economy hits demand. Manu Bhuskaran of Centennial Asia Advisors says Beijing needs to react.
The conditions are coming into place for a rapid easing of monetary policy, which I suspect will take the form of very aggressive cuts to the reserve requirement ratios. Fortunately, the Chinese leadership has the fiscal resources and the political will and ability to turn around the situation reasonably effectively.
India is facing even bigger problems. Growth is slowing more sharply, and expect more proof of that when the country reports its own PMI. Keep an eye out on trade data from South Korea and Australia too. Both are heavily exposed to the global economy, and trade data from each will signal how bad things could get in 2012. As growth slows in Asia, so will inflation. Indonesia is expected to report a continued fall in CPI. The country has already cut interest rates, and other central banks in the region will follow suit, according to Manpreet Gill from Standard Chartered.
Well, we believe that central banks will definitely ease policy a bit, especially in the first part of 2012. But we think that's lesser a function of inflation risk and more so a function of the growth risk emanating from the risks in Europe in particular and potentially the US.
So a new year in Asia, but little rest for the region's policymakers for what's shaping up as a tough 2012. Tessa Dunlop for Reuters.